Yeah. Hey, I remember serving down just in count allowances. Mattress, mattress, aim to the aim, to the aim full, aim full, Mercedes full. What if I did this to you guys, huh? My last stroke just went viral. My stroke, yo. Bitch, be humble. Hold up, sit down. Hold up. Be humble. Hold up, sit down. No. Boom, 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 boom. Hold up, sit down. Hold up, little boom, 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 boom. Don't semi. And semi. Alright, let's do some TGR backtesting, right? What else is there? Let's pull up the sticky notes. This is my 8 push review. Jesus. Alright. Alright, so we're gonna review TJR's strategy. We're gonna go more in depth on how he thinks. And we'll conclude the video, I guess, with a couple recaps, I guess. I don't know, right? So first of all, his strategy, right? How does it work? We're gonna literally do it how he does it, and I'm gonna show you an example of that. Let's go on to Russell. Alright, so we're gonna mark our session that we trade, right? Most volatile we know is the US session, right? Now moving on forward from there, we're gonna use is our general knowledge of our trading. So hold on, let me just market open here. This is market open, right? Let me hop on the 4-hour. Alright. Alright. So first of all, we need to know our draw of liquidity. Right? I'm gonna pause this for a second. We need to know our draw of liquidity. How do we know our draw of liquidity? Well, we need to understand that price wants to go in a direction, right? 4-hour. This is how TJR does it, right? Actually, I'm gonna put paint just to help you guys out a little bit better, right? Shaded colors are gonna be our red candles, right? All right. So what are we seeing? We're in a downtrend, right? Super simple red candles, but the higher the time frame, right, the more tiny candles have to build for this giant guy. So there's more price action going on here. So what does TGR do? Well, he looks at our bias, right? So say that we are bearish, right? Like this. What is price currently doing most recently? Well, we have lows and highs, right? So what's our high? Okay. Our high would be this guy. What's our low? This guy. What do? We broke lows. We're still bearish, and we use that to our bias. So what are we expecting? For a candle to whatever sweep liquidity. That's a 4-hour candle or 1 hour, and then form this giant guy that's gonna push even lower next time. So that's what's going on over here. Okay. So basically, we look here. All right. What's our bias? Let's take a glance here. Everything before the dash line. I'm gonna remove this guy so you guys don't get confused. Alright. So let's go a little simple, you guys here. This is our high. Our low. What's price do? Breaks low. We are bearish on the 4 hour. Higher time frames hold higher bias, so bearish. Now we want to see the 1 hour. Okay. Now 1 hour, we did break the lows over here, but we're not done because we do get a little retrace. So we create a new high and a low. Alright, we're still bearish on the 1 hour because we don't break a high and we don't break a low, but we get the last thing it broke. So 1 hour, bearish, right? Now we're gonna draw our liquidity. Since we're bearish and bearish, we want to sweep a high. So what highs do we have that we could sweep for the market? We got highs right here that we want to sweep. On the 4 hour, we have this high. Alright. Now we wait on the 1 hour till price approaches it. When does it sweep it? Literally market open, we sweep highs. We can hop onto our time frame since both biases are the same, and I'm gonna explain this right now. Let's pause it one more time. So when both time frames are in similar bias, right? So when both time frames look like this, right? Let me show you guys a little something. Alright, bam, on say the 1 hour and the 4 hour is also a downtrend, right? What can we tell? That we can be more confined because we have more accuracy. Now what happens when prices like this? Well, now we know that probably price is going to consolidate because what? 1 hour still wants to go the other way. 4 hours saying, hey, we're this way. It's just a whole lot of mess, right? So here we see both time frames are the same bias. The 4 hour and 1 hour. So we know our draws of liquidity are this liquidity sweeps. We know our price is probably going to seek it. And since the 4 hour bias is bearish, we want to cater to a bearish setup, right? So what do we wait? We wait for literally the hour candle to do its thing. What does it do? It taps into it. We can get into the 5 minute. This is gonna take me a bit. Alright, there you go. Alright. There you go. Wait, did we hit it? Alright, now we want to see a break of the downside. And what do we get right here? Break of downside. Right? Now we can mark equilibrium. Doesn't really respect it. We've got this giant order block. Don't really know what we can do with that, right? If you don't get anything, you can scale a little bit down. I know TGR loves to say scale a little bit down. And then we can use now 3 minute candles to give us a confidence, right? Maybe we're missing something on the 3 minute. To me, it just looks like a lot of consolidation, but we did tap into our liquidity and we are respecting it. We did break structure on the 5 minute, and here you could just use whatever candles for your buys, or greatest alive. Balls never. Foot wrap. Oh, too choppy here. We're gonna wait. What do we get? Another break? Cool. Alright, now we're gonna wait for price to create something that we can enter off of. Nothing, nothing, nothing. What do we get? We get our fair value gap right here. So we have break number 1 here, but way too choppy. I wouldn't enter off of that, right? We're gonna wait. Also because, I mean, these highs just keep getting swept. We got another valid break. This time it's full liquidity. Alright, what do we get for value gap? Price taps into it. We go into the 1 minute. price. It doesn't even load it. Alright, anyways. It does that, and then 1 minute we can look for a break of structure. When I tapped into that fair value gap over here. And then that's our determination of the setup. Same thing basically, like, let's pick a random one over here. Alright. What's our 4-hour bias on this guy? We're bullish, we broke last high. Bullish on the 1 hour as well. We broke this high. So now what are we looking for? A sweep of a low, right? So what are our draws of lows? This right here. We don't know if this is gonna be a low yet. We just see it's a high. So we came RQ. Let's go back to the 4 hour. This would be also a low. Does price sweep it at all? No. Okay. Now, when this happens, since both of our time frames are the same bias, we can use the 1 hour to say if it doesn't sweep it when market opens, right? So what does market do? It opens, it shoots high. We get another break on the 1 hour again. But look at this. We form a fair value gap. We wait, what does price do? It taps into it. Both time frames are the same. We could go into the 5. And now we just wait for a break of structure that, say, gives us good confidence. So what do I see? Here's our break of structure to the buy side. Here is equilibrium. Price respects it. Say you didn't want to enter off of equilibrium, right? Oh, that's cool. We got an order block. Say you didn't want to enter off that order block. That's cool. We got our breaker block. So all of these confluences, say equilibrium didn't look bad to you. Tapped into either one of these, right? Now all I gotta do is wait for one more break of structure. Where's that break? Up here. Back onto the 5 minute. We're gonna fix our stop. Stop loss. Below that low. Target this big imbalance. That's a lot. Never mind. But anyways, right? Full entire for value gap on the 1 hour here. And I'm sure on the 5 minute, I don't know if it's gonna load up. Kinda. We have these draws of liquidity, so then we just play the day. Hits it literally a whole day later. And this is why we don't hold these trades like that. This is Russell also, so the movements are very like silenced. You could literally have a trade like this. Alright, look. 2, 4, 6, 8. Hold on, we appreciate. Right, stops can be a little tighter. To RR, entry, close. Alright, and our draws would be literally this high. We don't hit it. We get stopped out by stop loss. At break even or whatever. Similar of what's going on over here. Alright. What's the 4 hour bias? Broke highs. We're bullish on the 4 hour. What about the 1 hour? bullish on the 1 hour. Okay, what do we want to do? Sweep lows for entries. Alright, cool. What does the 1 hour do? Literally, right here. We open, market open, tap into lows. Both biases are the same, allowing us to go into the 5. Now, what do we want? A break. We don't break you as a high. Don't break you, we're waiting for a break. Get a new high. We don't break you, we're waiting. New high, we don't break, we don't break. And what do we do right here at around 255, 1255? We get our first break, right? So now that we see a break, we're looking for a confluence, right? So potentially equilibrium. Okay. Push higher. New equilibrium. Yeah, it respects, but I don't know how far it's gonna get us. Right. I need confluences, right? What do we got right here? Fair value gap. That literally gets respected. Equilibrium. Breaker doesn't get respected. Same with the whatever it's called, order block. So here's our only two confluences, and then we decide if we want to enter or not. Alright, say price kind of respects you here or whatever. And we go into the 1 minute. And off the 1 minute, we will look for a bias that goes in confluence with whatever we were deciding. Right? Alright, right here. I think I did this one. I don't know, we'll pick a random one. Surely I didn't do that. Alright. Bias here on the 4 hour. We got a high. We did break past our last high, so we're bullish. We don't break the next high. We don't break the next low. We don't break the next high. And we don't break the next low. Alright, so based off that bias, we're still bullish just because of this last break over here. So now we're looking for draws of liquidity of lows. So you being a low and you being a low. Now we hop on the 1 hour. Alright, what's our bias of the 1 hour candles? Well, look at that. We're bearish on the 1 hour. So we're going to be using a 15-minute time frame. Alright. And we're still looking for lows to draw, so just a couple more, right? Now, what does that really do? It opens right here, sweeps that low. You can go into the 15-minute. Do we get any breaks when it sweeps that low? Nope. 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 And hold your horses. We look like we approach a break right over here. Right? Alright, cool. Now we mark equilibrium. What does price do? Literally taps into equilibrium. And on top of that, we also got a fair value gap. And on top of that, we also got order block 1, breaker block that, what am I saying? This order block and this breaker, so you got other confluences too, right? Look. The breaker that failed, price barely taps onto it, and then this order block doesn't get hit. Anyways, we break, we're bullish for high gap, right? We have equilibrium, once price 2 taps into it. And now we go into the 5 minutes since we're using 15. Now we just wait for a break of a high. They don't break any highs. And what do we get right here? A high break. Where's our low gonna be? I'll do below that. And we just target these highs. We can move our stop probably to the next equilibrium. And then this is an entry again. Now 1.5 hour R is not the prettiest, but you can't do much about it. This is how TGR trades. If you don't like it, you change it, right? But this is where we now come up, right? We practice a bit of the strategy, and we see the draws that like we personally don't prefer. So let's tweak it up, guys. This is what the video is about. We're gonna be creating a strategy and pack testing and while trading TJRs. Now, is it me trading that other strategy? No, but what I will be doing is back testing the strategy throughout this whole video to see if it's a valid thing, and then we will, if we gain confidence in it and I prefer it over TJRs, I might develop that one and stick to it. But for now, on top of this, we're also practicing our mentality, right? So let's talk about that. We are starting our funded challenge basically in June, early June. I got about 1, 2, 3 weeks left. I want to utilize these 2 weeks really for mentality, but also continue on with the strategy that I need to develop, right? My skills I want to practice. And on top of that, I already been on them for 2 weeks, right? Not much given. But these 2 are going to be important because I'm going to be meditating every day for about 30 minutes. And on top of that, I will be practicing strategies, right? And when this comes by, risk is really simple. It's all about now just managing and keeping a calm, collected mindset. How do we stay calm and collected? We learn to not give emotions, and we learn to stay very mentally there, right? So let's move on. Let's create a strategy, shall we? I'm just gonna pull up the text over here. All right. Number 1, let's write down what we need to know for our stuff we need. I forgot what the word is. We're gonna write down essentials to a trading strategy. All right. I'm gonna go grab my notes. All right, got it. Okay. I got it down. I'd like for us to talk about, first of all, how TGR thinks, what is all this, and how his strategy operates, right? The real stuff, right? So how does his strategy work and why? So first of all, he uses the 4 hour and 1 hour, right, for bias, because he wants to trade the candles that make up the 1 hour, 4 hour. Clever, simple, right? Next, he wants to know the bias of both candles, so he can understand the market's behavior, right? If one is against the other, price action is probably choppy. If one's with each other, then it's clean, so he can use a lower time frame. TGR he loves liquidity sweeps, right? And you see him utilize it with the 1 hour, 4 hour. So if price taps into it, he looks at the 15-minute, looks for a break of structure, instantly the 5-minute for break of structure because he knows it respects that area, right? So oftentimes it guarantees price to go the other way. Now if there is no sweep, then he'll use his 1 hour, 4 hour to mark a confluence that would replace the liquidity, right? Not that bad. If the 1 hour is the same as the 4 hour, then we can use the 1 hour to mark it. If the 1 hour, 4 hour bias are different, then we use the 4 hour. Because once again, choppiness, we don't like that, so we scale up higher. Alright, once price hits an area of a confluence, we wait for a break of structure on the execution time frame, like I mentioned before. The execution of a lower time frame shows a positive reaction to the confluence, like I mentioned before. So overall, what do we know is that we want price to do whatever, like we want it to go off of the 4 hour, 1 hour bias. Then we tone down to a confluence that is hit on the 1 hour, 4 hour. And then the lower time frame is meant for execution. So we're looking for a break of structure and another confluence. And once price hits that and respects it, you may enter. Now remember that we are trading for a 4 hour or a 1 hour candle. We're not trading a 4-minute trade. These are going to be candles that build up, right? So why does TJR use multiple confluences? To guarantee a safer and higher probable trade. Why does he base it on the market open? Because it's the most volatile time of the market, right? And why does he use multiple confluences instead of a consistent single one? It offers various opportunities to spot what the market gives. So that can be due to the market being different every day, as people say. People argue that, right? So one of the few confluences can allow for a more analytical and a more personal, opinionated approach. So instead of me being a robot, right, and following what? See, I love liquidity trades, right? So what is this? We swept liquidity right here, right? We broke market structure up here. And then I'm like, I am a robot. Must mark draws. Hits confluence. Enters. Right, what did we get out of that at all? Trade did hit. Was it safe? I mean, hey, trade hit though, right? No, we don't like that. We like to think of like TJR. Now, oftentimes, it'd be a little different, but this is what I'm saying is that it allows you to be more analytical, right? Hey, there's no fair value gap. Oh man, I can't trade. No, hold on. I'm gonna use all my trading knowledge and play it like if you were to play a video game. Say you play Minecraft all the time, every day, every night, after school, all that, right? You're gonna eventually become so like experienced with the game that you know the stuff naturally without having to like be a robot and follow a pattern, right? Trading is not about wake up, brush my teeth because I have to. It's about I wake up, I do this, I do that. Hey, this day looks rainy. Maybe I'm gonna wear a different coat today than I normally do every day, right? We're trying to think like that off of personal experience. Alright? So, like I said over here, alright, whatever. Price draws down, it shoots higher. Cool, but that's not what we want. We want multiple confluences. This is why TGR uses 3 confluences. Well, it's actually more than 3, but he likes to consider a confluence a break of structure, order block. I mean, he considers a confluence a liquidity sweep, order block, equilibrium, breaker block, and fair value gap. So over here, that's the equilibrium. That's one confluence, but that's it, and that's because we're on the 1 hour, and that's what execution time frame kicks in, right? So 1 hour to 4 hour, we mark out one of our things, right? Because we're looking at overall trend, right? Of whatever session we're entering on. So like over here, 9. What is it? This was our last high. Did we break it before market hit that thing? Yes, we did. So we're bullish on the 1 hour, right? Okay. We know we're looking for calls. Let's go into let's go in and mark out a confluence for our trade. What do we have? We have this giant order block. Okay. Market opens. See, I love executing on the 5-minute. I don't recommend it. I really like that thing about TJRs if they're both different. What did it do though? We tap into the order block. Okay, hold on. This could be important. What do we get? Alright, no, break a structure. Bam, break a structure. Right? We didn't break this high and we create a new high. We break it. Bam. Okay. Now we can force ourselves a new confluence. Either if it's equilibrium, which doesn't get hit at all. Okay. Maybe a fair value gap. What do? We hit the fair value gap. A confluence of a higher time frame that shows guaranteed respect. First of all, we broke structure on the 1 hour. Second of all, we tapped into a 1 hour order block that pushed volume higher. See how I'm getting more technical with this? It's not technical, it's all about understanding liquidity and volume. This, an order block represents a area where orders are going to be filled and are going to really have a strong bias. So, price broke it, right? The structure. Instantly, we get order block, right? The move down before or move up before. Cool. We mark the 1 hour. This is important. These two time frames show big important stuff, right? What does the 4 hour show? Well, the 4 hour shows what is going to happen on the overall trend. The 1 hour, same thing, right? This is where the TGR break of structure stuff is important because the 1 hour is so limited on what you could get out of a whole day, right? Look, this is basically market open to close. We get what? 6 candles? Yeah, not a lot. And that's why the 1 hour is important, because if we get a big area of draw liquidity, we know we're in an area that price wants to reverse. Instead of me trading the 5 minute looking for something and looking at the 15 minute and be like, oh yeah, it looks like it wants to do that. No. 1 hour, what are we seeing? Alright, that draw of liquidity. Alright, what are we probably going to target? We could target this 1 hour high. We can target, that was the fair value gap, the 1 hour high, right? And going on to the 4 hour, maybe we can find something higher. Oh, cool, we have this guy. Does he get hit? Probably not. What are we gonna mark? Probably the order block of it would be pretty valid, right? I don't think price even hits it. No, it doesn't. Last move up before the move down. Yeah. Cool. So, like, going back to what I said, this could be utilized, like I said, in the 5 minutes. This is why I did the example. What did we break? We hit it for value gap. Alright, price draws into the fair value gap. We can now use the 1 minute to execute for a technical thing if you don't want to practice patience. And there is no shame in that. Cool. Alright, what was our last high? It was this guy. Did we break? No. We create a new high? Yes. Here's our high. And when do we break it? Right here on this candle. Place it right there. And say you didn't like that. It was a good break, but hey, there's a retracement on this 1 minute. Okay. Now I'll be even more technical if you want to really optimize your entries. Okay, and what can I target? That 1 minute low. Or I can go on the 5 minute. This is where it's really up to the trader, but understand that if you're using a bigger time frame confluence, you might want to respect it more. Alright, bam. And now what are we targeting? These draws on liquidity. Now what does price do for the next moment? Bam, 12. 12 times 5 is our single contract profit, so 12, consider it 13 almost. We made $650 in the span of 5 hours. Now, yes, that is a lot. Sure, you might not even be in the mood to trade, but hey, you entered the trade, you set and forget, you know what I mean? That's the whole entire job of trading, is setting and forgetting. Now, let's incorporate TGR strategy and see how this would have worked. So 4 hour, obviously, we are... 1 hour, we know we're bullish. 4 hour, though... Let's see. We broke lows. We create new lows. We create highs. 4 hours, we're bullish still. I mean, bearish. So we would have sat on the 15 minute instead of the 5 minute for an execution. Same thing, though. Right, we look for 5 hour bears, so we want to sweep highs. So this we want to sweep. And all that. 1 hour we're trying to sweep highs. So you. What do? Wait for price. Price taps into it. We hop on the 15 minute. What do we wait for? Downside break structure. We don't get it. We don't enter. So you see how you can utilize different things. Now you don't have to follow strictly TGRs. What he's giving is a general overview. But this is what I mean, right? This is what I would do. Respect his strategy. But when it comes down to execution, you mark a 5 minute one, right? And whatever. Look, 5 minute for value gap, right? Right here we break structure. Cool. We tap into it. I get on the 1 minute, right? Because I'm like, alright, I like to be technical. I'm a little rat. When do we break structure? Yeah, cool, right there, alright. Either I can enter off of a equilibrium, of this new break. Doesn't respect it. Fair value gap of that break. The order block of that break. I don't have to enter right as soon as the candle breaks it. You know what I mean? That's just if I want to. You could get more technical. And that's what I'm trying to provide to you guys. Is that, okay, if you don't have any market experience and you're not good at marketing stuff, enter off the break. If you do have some experience and you see prices choppy and getting rejection like this, enter off of that. Same thing here. What do we do? Creating highs, we break. Okay. Now off that break, what can we mark? Equilibrium. Now watch this, guys. Price doesn't really respect it. Alright, whatever. Alright, move on. Set and forget. What do we got? Fair value gap 1 doesn't get respected, but what about fair value gap number 2? Respected. And we get into off of that fair value gap. So you see how we use 1 minute to get a specific entry so we don't get a little couple ticks off, right? We can use that for a retracement. The 5-minute or 15-minute execution, we mark our confluence. If we don't like price action, we wait for another break of that structure until it shows a good bullish thing. So like here, say there's a break on one of these that I was looking for calls and it doesn't like it, but then it breaks it over here and then we're bullish. I'm like, okay, that's cool, right? Nice. This is some good volume too. We broke that high too as well. Literally barely on this one too. So 2 highs are broken. We got 5-minute fair value gap. We can enter off of U. So I didn't like that 5-minute fair value gap. I wanted better equilibrium. I can mark U. Equilibrium gets respected. It's all opinionated on how you feel. You influence your confluences. You add them over and you're done. That's it. Set and forget, right? And TGR influences, like I said, these 4 different strategies, these 4 different things, because he wants you to understand that price is going to be different every day. You're not going to always find that fair value gap, liquidity sweep, market structure shift, trade, right? So complete it by doing this, right? Now, here's how I used to trade, okay? And you guys, I don't recommend it, but you can follow it. What I would do, 1 hour, look for buys. So I'm just going to mark market open just because of it. Alright, 1 hour is right here. Let me hop up 30 minutes. Just shift it twice. Alright, there you go. Alright, what's our 1 hour? We're bullish. What do I see 1 hour is drawn to? This fair value gap because we're bullish, right? What else? We already filled that fair value gap. There is also one up here. That we want to seek. Okay, cool. Now I hop on to the 5-minute. Right? Since I know where price wants to go, I use the 15-minute for confirming the trend as well. So, what do I see? We're bullish on the 15-minute. Okay. Do I see potential drawdowns on the 15-minute where we can retrace? Yeah, this fair value gap doesn't get hit. Alright, whatever. Oh, no, not really. Now I can go into the 5-minute. Right? And then I would wait for my setup, right? Which my setup is a liquidity sweep, market structure shift, and then a fair value gap. So that'll be like over here. This is our lows. When do we sweep the lows? Right here. We get ourselves a market structure shift, and we get ourselves a fair value gap. Is price respected? No, not really. We wouldn't enter. That's a bad day. And we just repeat this process until we actually get an entry that we like. So, same down here, we sweep. That was really bad. And it's considered an inbound trade. I don't like it. Too formal. It's kind of easy to trade, and you can get some good setups, but you're not utilizing your overall. Guys, all I'm saying, if you trade TGR, understand liquidity, where price wants to go, how it's behaving. Like over here, we're sideways, right? Okay, what does this mean? Weak volume is Asian, then turn London. London kicks in, poof, down, alright, down, up, but yeah, whatever. Same thing with the 4 hour. Like I said, you could have leave TJR's little bias thingy here. Actually, we're bearish. This would have been a no trade day, honestly, under TGR, but you saw how I caught a trade on the 1 hour alone. So you can do whatever you want, guys. I recommend his strategy, and that's my opinion. His strategy to me seems the most reasonable, and you can't really say that anyone's gonna trade it because everyone can find different entries from it, right? I might trade mainly off of breaker blocks. Someone else may trade off of a fair value gap. You know what I mean? It's just all in all They all have their own quirks. Let me put that music for you guys. Drewy, can you please put on that one beat? You guys want to hear that? Damn, Drewy, that's some serious gourmet. When the world's end, I'ma be with you. It doesn't matter if you got if you cool now. Alright, let's mark TGR strat for another day, right over here. Alright. I'm gonna have to delete these real quickly. Alright, cool. So, what is our 4-hour bias of this line? Let me delete you. Are we breaking highs, or are we breaking lows, or what are we? This is our high. We closed above it. Bullish on the 4-hour. I don't care what is going on. That's bullish. Alright, 1 hour. We did break recent highs. Create new highs, create new lows. We didn't break either low or high. We're bullish. Bullish on the 1 hour. What do we want to see? A sweep of a low. Alright. And we wait on the 1 hour until price sweeps one of them, right? So I didn't really like this sweep. I mean, the whole day is literally just bearish. But say we don't sweep either. And I'm like, oh shoot, we do get a fair value gap, right? Does anywhere in here get us a break? No, 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 no. Yes. Doesn't respect you. Way too big. I don't like it. Don't trade it. Simple as that, guys. You're trying to avoid trades, not really take a trade, you know what I mean? So we wouldn't take a trade that day. I'm gonna look for one more day that we can possibly find a setup on. Four-hour, obviously we're bearish, we can already tell. 1 hour, bearish, are looking for sweeps of highs. Here's a high, high, and if we even get this high, that high. Look at the 4 hour. Our only high would really be this, too. Alright, what do? We sweep it. Both time frames have the same bias. Do we even manage to sweep any? No. Alright, since both time frames are the same, you can also mark out any confluences at the time that are given. Alright, what do we get? This 9 o'clock opens. Nothing. Nothing. Do get this for value gap. There's an ice cream truck outside. This price still approaches it. Wait for break. This is super choppy, honestly. I would not love to see this. We get our break finally. We get a fair value gap. Go on to the 1 minute. We get a break. Checking if I'm missing a confluence here. I'm not. No. We could target lows or whatever. Now, once again, this is a choppy day. Why would we enter, right? And that's because it's Wednesday and news day is upcoming, and then poof, news happens and we shoot up high. So it's important to know also TGR does a PM trade. So this is where, like, if I don't find something on morning session, I can find something on nighttime. And so that would be where he marks 2 o'clock. So 2 o'clock. Alright. Market open. Alright, so we're bearish on the market open. We're still bearish at the 2 o'clock guy. I do see a high after sweep on the 1 hour. 4 hours, nothing. Go on the 5 minute. What do I see? Price sweeps that high. We break this low. Tap into the equilibrium. Oh god, what the heck? Okay, let's not do that. Bam, roll down. Roll down. Everybody here. Here to it. It started. But anyways, the answer puts and then bam. Oh yeah, no, this already's been long done. Anyways, yeah. Let's get it started. Now I'll show you actually a recent trade I took on ES with his strategy. This one. And this should utilize a better explanation too, right? Alright. Market candle, what are we? Last time we couldn't break this high. Did we break our last high? No, we didn't break that last high, but we did break the high before that. Did we carry a low? Yes, we did. We didn't break that low, and we didn't break that low. So we were bullish on the 4 hour. So I'm already looking for something long. Or some longs. Something long. Let me make sure I was looking at the right one. Yeah. And then I looked over here on the 1 hour. Alright, this is our candle. What are we? Bullish on the 1 hour. So bullish and bullish, okay. I want to see a sweep lows. Does price sweep lows? Not at all. Okay, so what do? We wait for a confluence. What do I get? Fair value gap formed. And on top of that, I couldn't really find equilibrium. I don't know why I marked that. Maybe it was a 4 hour one. That'll be too much. But yeah, I mean, 4 hour applies as well. Hour equilibrium. Both time frames are the same. We wait for 5. So, oh right, if they're the same, I don't have to use a 4 hour. Right, okay. Started hot. Started in here. Oh, I marked the wrong one. Am I retarded? Oh, I can't say that on YouTube. Now I'm banned. Alright. Well, we don't get an equilibrium. What do we do get? Fair value gap. We don't hit the square box. All we get is a fair value gap. When our list price do is seeks it. Cool, we can get into our execution time frame. Right over here. Now we're looking for a break of structure that's bullish. So what do we get? We do break this high right here. But then we proceed to break the low. So I'm like, alright, I'm like that. I'm away for one more break. What do we get? A new high. Doesn't get broken, creates a new high. Gets broken. I'm like, alright, that's valid. Now I'm away for an area of liquidity. So what do I have for possible confluences? We have equilibrium. Price doesn't respect it. We got fair value gap. Price sort of respects that. I wouldn't really answer that. Order block. Price respects. And if you want to do breaker, you can do that too. Taps into the order block, right? Now I'm like, alright, now it's execution time, right? Now it's like, hey, I'm Mr. Krabs, let me cook up in this out. So I go in there. Now I'm like, alright, I need to break a structure on this, right? On this order block. We get our high, we break upside. I'm like, alright, that's epic. Enter on the candle close. It should be up here. No difference though. And we enter, right? Just like that. There's no confluence that I can miss. One more time, it's enough already. And then we enter, we catch the trade. Bam. We close. And what was our targets? Well, we can look to our left of the time when we entered. We had those as highs. I don't see anything here. We go on the hourly. And then we can use prior chart stuff to our benefit, right? So like uh 51995. Yeah, over here. What do I see that we could target? Bottom this fair value gap. Back onto the 5-minute. Unfortunately, we would have gone stopped out, if you guys can tell. But stop losses moved up, we'd be fine. And plus there's 13 of ES. That's 20 times 13. No, ES is 50. 650. And then yeah, once again, another example. Voila. Alright, I'm cutting the stream, boys. That's it. Hopefully you guys got any info from this. I'll be posting more streams later on. Tomorrow, new day of trading. We're gonna be talking about it. We're also gonna be meditating today at what's it called? What time? Like 7:30? It's like 8. And yeah.